The key to successful trading is not just knowing how to trade a pattern. It's knowing which stock to trade in the first place. All right, let me ask you this one question. For those of you that are beginner traders, are you overwhelmed? Can you not find any stocks? Are you just like looking up every single chart that everybody's throwing at you and then you're suddenly left like, oh my God, none of this makes sense. It's just a bunch of red and green lines. Which ones do I have to focus on? What stocks do I trade? If that is the question that you have, then this video is for you, because I understand. I was there in the beginning as well, where I was just so overwhelmed. And I remember being in different chat rooms and everybody said a different ticker because we were all trading very, very different. And I just wanted one person to tell me this is the exact criteria that I use. This is how I build my scanner. This is exactly what I'm focusing on. And I am going to tell you today all of the answers to these things, because I remember being a beginner and having 10 different people shout out 10 different tickers. And now I am like, I'm right at the beginning because I don't know where to start. So that is why it is so important to build a watch list in the first place. That is where we can get started with this video. The importance of building a watch list. A watch list contains not only the best stocks to watch on the day, but also what plan you're thinking, where your entry should be, where your exit should be, why you're watching it in the first place, if it has any news, if it has the right volume, and is this trade that I'm about to take going to give me the higher odds of success, or is this trade something that I should not be focusing on? That is what a watch list is, and that is why it's so important to create it, because if you don't, you're going to keep being 100% lost. And if you don't have plans before 9:30, the market's gonna come at you, throw every single one of the stocks, and you're not going to know what to do with it, and you're going to overtrade or be confused, overwhelmed. So let's get started. For the tools I use, I try to keep it as simple as possible. I don't want to complicate myself with a bunch of different platforms, a bunch of different things. These are the ones that I use every single day. Stocks to trade. Stocks to trade is my scanner. This is the one that's going to tell me the stocks that are up today, not the ones that are up on the previous days before that. That is separate. This is the one that's going to tell me what's up right now, and I will show you guys in the video how I use it. The second one is Thinkorswim. Thinkorswim is a great charting platform. I love the way their charts look. They're so clean. And this is the one that I use for trading. This is where I'll go long, only long. And the third one is Cobra Trading. This is only for shorting. I have not been shorting recently, so I'm not using it very often, but when I short, it's at Cobra Trading. And number 4, Discord. Discord is not a platform for trading. This is a platform for myself. It can be used for chat rooms to talk to other people, but it can also be used to create your own server, and that is exactly what I did. So I created my own server, and in the app, you can create different categories in your own server. So I will have a category that says watch list, one that says journal, one that says trades, and you can create as many categories as you want, but I like to keep those things organized. So those are the 4 platforms that I use every single day. I don't use any other, and I just like to keep it as simple as possible. I'll open up stocks to trade, and I'll go to the scans, and I'm going to look at the percent gainers, $20 and under. I want to look at all of them. I'm going to delete bid, ask, last, and net change. These are things that I don't care about. Now I'm going to add the range of the stock. I'm also going to add the float of the stock. And I'm going to organize them volume first. That is the one I care about most. Then the percent change, then trades, and then float. And now this is going to give me the percent gainers today. So now that I've explained everything that goes behind the scanner that I use and how I find the top percent gainers on the day, now I'll go into some of the definitions that might sound a little bit weird where I found my scanner. Now I really want to emphasize volume. Volume is the first definition that you need to know. Volume is king. You never want to be in illiquid stocks. Illiquid meaning anything below 500K volume. You want to be looking for stocks that have attention because those are the ones with the biggest momentum. You want stocks that people are also interested in because the people are the ones that are moving the stock in the first place. You don't want an illiquid stock that nobody's looking because the price is just not going to be as clean and as neat as a stock with volume would be. Volume shows me if there's strength behind my buy because I want to be behind a trade that has more movement. I don't want to be behind a stock that's like super slow. It's like lagging. Nobody's looking at it. It's not interesting. I don't want to be in a stock that's not interested. I want to be in a stock that is interesting, that has other people's eyes on it. Those are the ones that are going to create the cleanest, biggest moves with the most momentum, and that is why volume is so important. If there's one thing that you can take away from this video, always look for high volume stocks. Those are the ones that are going to be the easiest to trade. The ones that are liquid don't move that much. People aren't buying or selling that stock, so it's not going to move anyways, and it's just going to create little barcodes that you're not even going to understand. So you might be in a stock that moves like 1-2 cents in like a course of like 2 days, and you're like, why isn't it moving? Well, it's because it doesn't have volume. It doesn't have people behind it. It's not interested. It doesn't have momentum. Trades with volume, it would be a lot easier to make 10 to 20% quickly, relatively quickly, in a few minutes if the stock has volume. Now, the second one, price range. And this isn't just the price of the stock or if it's $1, $2, $3. No, this is how much a stock moves throughout the day. So say a stock is at $5 a share and then it goes to $5.10. That is a 10-cent price range. But say a stock goes from $5 to $6.50, that's $1.50. And that difference, that movement, that is the price range of the stock. So to make it like a lot cleaner, price is the price of the stock. Range is the movement from where the stock started to what it went to. And the higher the price range, the more opportunity it creates. If you're in a stock that is up 10 cents on the day, well, that's not going to give you the same opportunity as a stock that's up $1.50 on the day, because that movement is going to give you that opportunity. Say it dips down 50 cents, now you have a chance to buy it. Whereas the other one, it's not going to give you a chance, because if it goes down 2 cents, then where are you going to enter? Where are you going to exit? It's not going to give you that movement. Versus the other one, it has such big price range that you have more chances to enter and to exit safely, and you don't have to get the whole move, and you don't have to trade it perfect in order to get the move. You want the higher the price range, the better. Now, for the float of the stock, this one is a little bit of a complicated one. I'm going to try to make it as simple as possible. The float is how many shares are available to trade. So each stock, each one of them has a separate float. Not all of them are all the same. Everything is going to vary. And also in that scanner, it'll tell you how much float the stock has. What float does is it tells you how explosive a move can be and how easily a stock can move. Why? The lower the float, the easier it is to move a stock, because there are not too many shares available to trade in the first place. So what happens is there's so many people trying to buy it. Say the volume is very high on this stock, and that is why there's so many people interested in it, but the float is tiny. So what happens? There's little supply, huge demand, and that is why it creates much more explosive moves, and those are the ones that will move the most. So a nano float, it is anything under 5 million. A low float, 5 million to 20 million. And a mid float, 20 million to 100 million. Now a high flow is anything over 100+ million. So depending on those numbers, that is what you would be trading, and you can check it on Stocks to Trade. You can check the float on Stocks to Trade, and of course the lower the float, the more explosive a move can be, and the higher the float, the more calm the trade is, but it's not going to give you these insane moves in such a short amount of time. So to recap everything, volume brings attention, price range gives you opportunity, and float controls how quickly and easily that opportunity can be. So now we have 10 stocks. Now, the next thing on my list would be looking at a clean daily chart. And ideally, Once I look at this, I'll get 5-6 stocks. A clean daily chart on Thinkorswim, it is very easy to add the time frame, 6 months, 1 minute, and that allows me to look at the last 6 months of the stock and see how it's done, what history it has, and what levels are holding, and if it's not holding at all. I am not looking for stocks that are choppy, all over the place, and losing volume. If I look at a daily chart, what I am looking at is consistent moves that are holding. For example, a stock went from 5 to 10 all the way back down to 2. I am not interested in that stock. That stock to me is choppy, and it's almost like it lost all trust because it gave back every single one of the gains. Now, a good stock, a good daily chart, it went from 5 to 10 back down to 7, and now it's trading, and it's creating this channel, an easy risk for me to risk off of, and it's a consistent type of daily, and it's like building your trust in order for you to like wake up one morning and now say they release news and they have volume and it's trading right around the breakout. Now I am interested because this is a clean daily chart, it has volume and possibly news. So that is what I'm looking for. A clean daily chart is just something that is holding and it's not all over the place, and you don't look at it and then see 5, 10, 2, 5, like that choppy to me. Looking for a stock that's holding levels. What level is it holding? Because when a level is holding, it means that this is a level and it tested a few times. That is clean to me. So I want to be looking at that when I'm looking at a daily chart. What am I looking at when I see the pre-market action? The pre-market action is the same exact thing as a clean daily chart. If it went from 5 to 15 all the way back down to 2, I'm not watching it. That's a crazy stock. What am I looking for? Same exact example. 5, it went from 5 to 10 back down to 7, and now it's holding for market open. Say it held for around 30 minutes or so. That created a good risk to reward action for me because now I can risk the low of that channel and ideally test that pre-market level again. So now once we have clean daily charts and clean pre-market moves, we should be at around 5 or 6 stocks at best. Now to get to maybe 3 to 4 setups, these are my A+ setups. I'm looking for what patterns are being respected. Am I looking for a breakout, a first green day, a panic dip buy, and what levels I am risking off of? So I'm gonna write down on my watch list, this has good volume, it has a clean daily chart. What is the pattern that I am looking for and where I'm looking to enter, exit, and how am I doing the risk management? That is how I include. And the ones with the best risk to reward, those are going to become my A+ setup. And now I'm going to go in, write the date, and then I'm going to go into the scans and check every single one of them. First one is AGPU. It's a breakout on the big daily chart, so I like that. Now I'm going to go in on the 1 day, 1 minute, just to make sure that I know what's going on pre-market, and I really like the way that it held that 965 level 3 times. So now I'm going to go ahead and write everything down. And even if it's up a lot, I'm still going to include it because if it holds levels and it gives me an entry and a possible risk, that is all I'm going to care about. It is a breakout. It is a percent gainer. It has volume. It has low float as well. So I'm going to include all of those, whether it works or not throughout the day. But I want the confirmation first. Next one is ALP. I don't like it. It's too weak and it's choppy like I mentioned in the previously. So I'm going to ignore it. Same thing here. Too weak and it gave back almost everything. Same thing here. So it looks like a lot of the percent gainers today just do not have that action that I'm looking for. And that is completely okay. I like this one. This daily chart is important. It shows a clear breakout around the 9 level. Also has good volume, also on the percent gainers. So that is one that I'm going to include. This is P-O-E-T, poet. I really like that 9 breakout. The only reason why I don't have immediate plans out the open, or I'm not looking at it for a trade for today, is because I wanted to hold for a few days longer since it did already have that initial breakout. I want to see more consolidation for it to hold a few more days after it already did the move. This is the next one, but on the daily, it looked better than it did on the 1 day, 1 minute, and that is why it is so important to also check every single one of the time frames. Daily chart, 1 day, 1 minute, 5 day, 5 minute. Those are the 3 that I like most. Again, these don't show a lot of action, so I'm not going to include them. And this one is very illiquid, so again, not on the watch list. And these are the ones that have been running the previous weeks. So I'm going to scan through them quickly and see which one has a potential trade. Here I saw Battle. I guess I just wasn't very interested. Ended up going right by it. Again, all of these charts, I just want to get an idea of how they're trading. And then here's CAR. This is one that has been going up huge in the past few days, 21 days. So I am writing down this is not a trade because of how dangerous it is, unless it gives me a reason to believe that maybe tomorrow, once it does go red on the day, then that would be a potential strategy for me, not guessing and hoping that this is going to work. And these are just some examples that I've taken in the past following this same watch list. This is a process that I repeat every single day to stay prepared. If you want to get a copy of my exact scanner settings, I've made it available as a free download. Link in the description. And if you have any questions about this process, drop your questions below and don't forget to subscribe.